Everybody, welcome. Hope everybody is well. Um, Another Friday, more trades, same types of movements, not too many developments in my opinion. Everything's kind of just rolling as they should be. But in terms of before we get into the charts, I do have a couple of updates. Um, Today is the last day for everything in terms of like price changes when it comes to the group, when it comes to the book, pretty much every price that's on the free Discord, that's probably going to jump up after today. I'm also going to be upping the security on the free Discord and on the private Discord. Yeah, if you guys get somebody trying to offer you some like stupid service, like please do me a favor, just like troll them, like waste their time. They're like people like that are just I don't know, scum of the earth in my opinion. So have your fun with that, and I would greatly appreciate it. But on a serious note, if somebody's offering you something, just don't even bother. You guys know I'm not gonna DM you and offer you something like that's kind of counterintuitive, right? If I have something worth of value, you would come to me, right? I'm not here to sell you that. You know, if you see it, then you get it. If not, then we just carry on with the free stuff. But other than that, I'm gonna go through probably like three or four scenarios today. Two things that I included in the broadcast channel on Instagram, and then just like I'll just go over my like two trades that I took this week. Um, but yeah, we can go ahead and get started. So, outside of that, the asset is going well. I'm still making changes to the indicator. I think this still has a couple of upgrades to go. I'll show you guys one of the changes that I'm making or that I've already made once I get back onto my trading view window. But other than that, um, I've really been trying to focus and just hone in on the concept of my sweeps. As you guys know, the sweep has always been essentially, right? Hopefully, this is like a bullish market, but the essence of a sweep is to look for, right, any type of range high or low, and then have a transition internally to then pursue the immediate levels of liquidity, right? So I've been testing this out a lot on crypto, especially just to see how stuff moves, see if it's as functional as it is on currency and metals. And so far, it does seem like it is. I'm gonna keep running some tests. I'm only really gonna be focusing on like Solana, Bitcoin, ETH, and uh, and Ripple for the most part. I'm probably not gonna look into any of the smaller coins just yet. Maybe down the line though. But just as an example here, excuse me, right? My scenario here is we take the low, right, of a previous high-low retracement continuation, ABC leg, right? But within the right after we took out that major low here, we do have a transition. I have an internal sweep here, right, causing the unsubstantial new low, right? And a big refinement that I've really been enjoying over the past week or so is the fact that we have an external sweep and an internal sweep. That gives me pretty much full confidence that this is at least going to give me a reaction to the upside, right? Maybe it might not hit all of my targets, but um, that has been a big catalyst as to why this has given me at the bare minimum a decent reaction to where we can at least take we can move our stop, or we can at least take right the internal CBOS here. So the result of this here, right, we got our bouts, and then this kind of just flew by, and the reason why I was aiming for this, right, is because the external was actually bullish from what I recall, but the objective of a sweep in for me is always to get the internal model here and then the external target, right? And after the external target, right, we don't know what can necessarily happen. You can probably have a opposing sweep, which is something that we saw with AUD USD this week, which I'm going to show you after this, right? So or we can just have this completely go through, but the thing is we just don't know. So I had actually targeted this right here, which is the counter POI of the internal bearish trend. So other than aiming for this, I just thought it was a bit more conservative, and my risk to reward was already about a 1 to 5 at the point. So at this time, I'm sorry. So it was it was, in my opinion, just a good target and a good scenario here. So moving on to the next thing, I showed this last night. This was kind of the setup for NFP yesterday, right? I was trying to see pretty much because we've been having a lot of retracing price action. We're having a lot of retracing price action. So the fact that we had taken, right, the CBOS, which confirms, right, the high into the low, right, any type of move here, I'm very curious to see if we can either sweep or if we're just going to continue higher, right, and pretty much cause some type of structural disruption, right, or just a change of character into the upside. So what I was seeing here at this time, which I will also pull up here on the TradingView chart in a bit, right, is the CBOS, right? Yes, we had then the internal sweep. So we had the external potential sweep and the internal sweep once again. And then we actually had an internal sweep based on that as well. So seeing the additional sweeps internally is what's giving me confidence that if I do see a setup to the ups or if I'm favoring the downside, I'm sorry, then I am actually way more confident just because of the internal sweeps, right? This is just the CBOS, but right, this is now the confirmation of an implied sweep because we have that engulfing in there. And it could be a reason to at least give us a reaction to the downside to at least aim for here. And if we take this with conviction, then we can really start a move to the downside. Because obviously we have been bearish for the past couple of weeks. I'm still not going to be um, favoring any kind of bullish side. Right? I still think any kind of bullish side is going to be a pullback, at least until we reach a weekly low. And by that weekly low, I'm referring to this screen. So we're back here. All right, and as we can see, I believe it was 10-minute. Yeah, it was 10-minute. Um, Based on the previous image we were looking at, like I said, CBOS, which confirmed, right, the high into the low, and then we had internal sweeps plus the implied sweep to give me a reaction to the downside. And this is kind of what's generating, right, that entire move. Not to mention, right, the where this is in terms of a H1 POI. So if we're looking at this from the perspective of direction, then at the beginning of the week, obviously clearly we're bearish from a swing POV, but at the beginning of the week we did see this sweep here. I think this was like Monday or Tuesday, where we saw this low being swept. So once we saw the low be swept and we saw the final internal leg be broken, this is indefinitely bullish, right? Indefinitely bullish unless we get a transition. So obviously we have a low, high retracement. And once that retracement reaches this, that is now solidified. But we're expecting this high to be taking out everything if we are to remain bullish. But that is now invalidated once we break here. So we now technically have an LGC, which favors, right, the internal trend, bearish trend to the downside. And that internal LGC, sorry, is the reason why I was anticipating that M10 move to be a potential area for price to continue lower. Right after the OGC is confirmed, CBOS, implied sweep, and we have the move into the downside. So that was kind of just where that entire bias was coming from. And especially now, I'm still anticipating this to continue lower. At least, at least. Actually, let's look at the daily. This is fine. Right? At least until right we get to like 96.5. Right? After 96.5, I just think this time for us to roll over. After 96.5, then we'll see if this is to give another leg to the downside, because if we're also referencing the previous leg, then this could have, it has some ways to go. And clearly, even though we still see pullbacks into the upside, it still keep failing. So I think this is still going to continue lower. Um, but other than that, I do have two scenarios with AUD which is pretty much my pair of the week. This is the main thing I was looking at this week. Everything else is kind of just choppy. I didn't really like how anything was moving. I was looking for UCAD sales as well. I just didn't get any type of entry right back at this POI here. I never got some type of entry. Um, but I had two scenarios. One scenario was a sweep during my kill zone of Asia, and then this was a move from yesterday, which was an M10 implied sweep. So scenario number one, right? I had seen a move into the downside, right? We had CBOS plus the CBOS. We had the bearish engulfing, which I consider to be the sign of the implied sweep. And if we see that result, that's we got the full delivery. And why am I aiming for that zone? That's because that's where the sell to buy was, or the opposing sell to buy was in my here. So this sell to buy could have been a reason for me to either continue higher, or we could get some type of disruption and go lower. But I don't care. I just want to get my target. All right. So as we can see here, not to mention, right, that once this high solidified, we did have unwillingness to the upside. So this kind of just favored my overall overall bearish bias, or just at least for the short term. Just because I knew that this sweep, implied sweep, sorry, is during my kill zone, and I'm aiming for a reasonable target, which actually hit right after Asia session was complete here, right? But actually, it's actually way even lower. So if I would have held this, then it would have probably gotten way more of a move. And yeah, as we can see there, like this ended up being like a 6, 7, and then this probably could have been even more. So, like I said, this implied sweep, I'm really excited for to release that book. Um, this is pretty much my modern day what's the word? Practicalization is like maybe that's a word. Like I'm trying to make high risk to reward a thing again, but making it practical enough to be something that can be done not only repeatedly but with logic. And not to mention the whole idea behind Wyckoff is to um, find that manipulation to then go into the opposite direction. So the implied sweep in and of itself is a manipulation, and you're looking to aim at the other side of the market. But like I said, this is kind of like the my modern way of incorporating high risk reward. And it seems to be working out pretty fine, right? I'm just kind of setting my TPs a little too short, but that could be something that we can improve over time. But yeah, number one, bearish implied sweep, that delivery's there. And then my second scenario was yesterday, which was after we had taken we had after taken that low from that previous sell-off. One thing that was kind of throwing me off a bit was the fact that we had a massive gap here. We had a massive gap here. We had a failed move into the upside, right? And we know that there's three things that can happen at a POI. And where's that POI? There, right? It's the open, the 50%, and the LG of that. But once we have the LG of the move, I did notice that we had a implied sweep, and also once again that same refinement that I just mentioned, where we had the internal sweep as well, gives me the conviction that this is going to at least give me some type of reaction into the upside. And if we go into smaller time frame here, there is actually like a traditional sweep, because that original Solana move was actually a traditional sweep. It wasn't an implied sweep. And obviously I cover those differences in the book, right? Because as you guys know, although we had unwillingness up here, the overall general bias is to the upside, in my opinion, especially because we have a low, high retracement continuation. Does this imply that we have internal willingness? Yes. That's why my target was only, right, relative equal highs up here. As you can see, let me delete that. Relative equal highs, that was my target of the implied sweep. But this ended up going even further. So this probably could have been my main target could have been up here, right? Which is that full break of structure right there. Which once again would have been above the 1 to 10 risk to reward. And as you guys can see here, this is where that M10 engulfing had come into play. And if you go into smaller time frame, right, we did have that final, excuse me, right? We did have that final move, but then we had the continuation break of structure. But really, if we were looking for the traditional sweep, then we're looking for this to then give me that move, which is order flow disruption. And then based on that order flow disruption, we can then justify the conservative entry, which would have been here. All right. So the implied sweep is more so concerned with engulfings and by default more aggressive just because there is an implication to it built in. But the traditional sweep, as you guys know, is pretty much a transition after that, after the insubstantial low. And if we were to have used that parameter instead, let's do that. Then the risk reward here would have been about a 1 to 4, which is still very well. So, I mean, very well, very good. So overall, if you would have taken that traditional sweep, that's one way. And then the other way was this, which is a 5.3 to 1 risk to reward. But I am a little disappointed that I didn't hold this a little bit more. So I guess now, once I finish everything in terms of the sweep book, that's going to be probably my next refinement, seeing how many levels of structure and which levels of structure I have to incorporate in order to um, justify holding a bit longer. And if the thing is now with if I am using multiple levels of structure, then I know that the frequency of the trade is definitely going to diminish. So it's just really going to be a give or take. Which one am I going to be willing to give up the frequency of the trades or um, how long I hold my TPs. So all in due time, all in due time. But other than that, that's kind of the gist of everything I have right now. Don't have much more to go over besides the only refinement that I have so far with my indicator is the fact that I'm actually going to be moving feeds. I'm going to be moving feeds just because the feed here is kind of stupid. Like if you guys look at the new day here, it's really stupid. Um, so I'm actually considering moving back to FXCM because like if you open up FXCM, right, notice that there is no, I'm gonna circle it here. Right, the manipulation shown there um is not present in a lot of other feeds. You see what I mean? And this is obviously not the biggest detail for most people that are trading, especially at this time. But the issue is that if I keep my indicator um to recognize my Asia session from the open of the new day until right 12 p.m. I mean 12 a.m. sorry, my time, then the issue is that this now becomes a solidified low and it can really mess with my directional biases because this could now be right a sign of structural disruption, meaning that I'm should be which could be correct, but I just don't want it to sway just because of a manipulation that's not present there on most brokers. So what I'm gonna do, probably move my feed back to FXCM, something a lot less manipulated, and that one has access to volume compared to Oanda. So yeah, other than that, I have changed the time here to 4:30 because I just don't want this to be an issue. So yeah, and I think it kind of varies by broker as well. Like if you look at like IC markets, right? IC markets had it as well. Like if you look at Pepperstone's another big one, if I can find it. Can't find it. Oh well. Um, but yeah, like 8cap had it as well. Forex.com had it as well, but FXCM did not. So I'm not saying that it's the most reliable feed just because it's kind of impossible to find a most quote unquote most reliable feed that's not kind of real. It's kind of not a thing because it's CF we're trading CFDs, of course. Um, and different liquidity feeds provide different pricing. So I just want probably I'm gonna stick to FXCM just because of the least manipulation, and I don't want extra targets or solidified points be swayed by a manipulation that may not actually be there. You know what I mean? So that covers my small rant for today. Do we have any case studies, questions, concerns? What do you guys think so far of everything?
I have about the first trade.
Solana?
No, no, the second then. The AUD first trade. Yeah, I would just say, now if you can zoom out a bit, that even though this technically, yeah, is a CBOS and that
Mm-hmm.
solidifies and want us to continue higher, because it is in such premium pricing of the range, I would say that they did that to get the sweep. That's why I really like the sweep here. Actually, I think it's super clean because they make people think that we continue from here, but because we're so in the premium of the range, then it didn't work, in my
Mm-hmm.
humble opinion.
Mm-hmm. Who is they?
The market makers.
Composite man, yeah.
Yeah.
Yeah, so yeah, that's one of the biggest things here, especially too. I really could have been a lot more conservative. Like if I was a lot more conservative, my trade would have been here, you know? That would have been way just a much more conservative trade because we did have the break here, and then this break implies unwillingness, so that means I can pursue, right? The same target, which would be this, because obviously I'm still bullish, you know? So that's why I'm aiming for this
Yeah,
sell to
the
buy.
target was very good.
Uh-huh. And I could have probably fit that as well. Let's see. I'm also I've been rounding up my numbers here, so just to test things out. Point 0.7, point 0.5. I just care for equilibrium, and then my pricing here. So this would have been decent because let's see if this lined up with anything. It did line up with a negative 1.5 here, so that would have been a 7 again, yeah. But yeah, I'm really trying to see if I can maximize this risk to reward again because I think my focuses over the years, if you guys have been paying attention, have really switched up a lot. Just because I've been trying to just evolve as a trader in general. Like back in 2020 and 2021, right? The whole goal was to have like 20 RR plus, right? And then from 2021 to 2022, I took like I really kind of took a bit of a hiatus. I wasn't really too active on socials. I mean 2022, 2023, etc. So, but then 2023 slash 2024, right? You guys see that I focused a lot on making sure that the models were really good and making sure that the that once I got a model, I'm just aiming for the extreme target. So the risk rewards at the time were about a 2 to 3. I was actually aiming for like 3 for the most part. So I now understand. Well, now I guess we can argue that 2025 and beyond is I'm now trying to add a lot of trying to make sure that every position that I take is logic based and it's following not just a pattern criteria, but actual but I think there's no other way to put it than logic, right? Because now I'm really aiming for like 6 to 7 plus RR per trade, right? Because if I've been testing a lot with the sweet bottle and I'm getting like at least a 5, but if I can aim for 6 or 7 plus RR, then this means by default, if I'm getting a 6 to 7 risk reward, then my entry is really good internally. And I'm probably aiming for maybe 2 levels of structure above as my TP. Right. So now, right, in order to get from this back to this now I now have to incorporate either the target of the next 2 levels of structure, right? And I say 2 levels because I've revamped that as well, just because I had to revamp it for the structural level. Like if you guys want to just see really quick, right? There is micro, scalp. Okay, M10 isn't one of them. Sorry, M10 is not one of them. Scalp. Um, minor intraday, major, minor swing, major swing, minor macro, major macro. And the reason why I did that is because to I did that to add a lot of organization to the structural levels, and especially because every I went by like 10 assets, and I went from M1, and I said, okay, what is the current range in play? And then every time I zoomed out a time frame, which is the ones you can see here, I didn't include M10 or H1. But every time I would go up either one time frame or two, then it would show a brand new range. So I just didn't want to keep implying that, okay, if it's implying on M30 and H2 that I'm technically in the same minor intraday level, but it's giving me two completely different ranges, then that's contradictive. So I've had to do that just to make sure that these structural level stuff it makes sense. So now that's kind of referring to this as like two structural levels as the target, right? So let's say we're at a scalp, then I can aim for a minor intraday target. Or if I'm at a micro, then I can aim for a minor intraday target, and then we can go into right a minor swing target. And then from here to here, this is probably like a 5 risk to reward. But then from here to here, right, we're not talking like 12 to 15 risk to reward, right, et cetera, et cetera, et cetera. So just to let that make a little bit more sense, would be like this scenario, right, which you had on here, right? So I have a scalp entry per se, right? Because the implied sweep is essentially an implied internal sweep, which would be based on a micro. So if I'm aiming for this target, then that's probably actually let's zoom out. Let me do this here real quick. That's probably a scalp target here. Actually, a micro target. Well, micro, this probably be considered a scalp target. But if I'm now looking for this, which would be a minor intraday target, right, or a major intraday target, then I'm now pushing the boundaries, right? So it may be higher risk reward, but you guys get what I'm trying to tell you is pretty much trying to use what structural levels am I gonna have to correlate to get X amount of risk reward. But the more that I correlate, right, the cost is going to be the diminishment of the amount of trades I'm going to be able to take. So now, because I think that we've kind of essentially mastered the approach in terms of models, like we have four models, right? Three in the core book, and then all the sweep stuff is going to come out in the new book. Then we're looking for those models to pretty much give you either an internal target or an external target, but internal and external is relative to the levels of structure that you're going to be referring to. And depending on what levels of structure you refer to, depends on the level of risk reward that you're going to get, whether it's, like I said, a 1 to 3, 1 to 6, 1 to 11, slash 12. And then if there's like a major target, that being 1 to 15, et cetera, et cetera, et cetera. So yeah, it's my little rant for today. Does anybody have any case studies that you really want to go over uh, before we call this off? Because I don't have much else to talk about for the sweep
Yeah, I
call.
have some case studies.
Which would you say is your go-to now? Well, here's the thing: an implied sweep is a traditional sweep, but a traditional sweep is not an implied sweep. So like the nuance that you're gonna have to learn, right, even after I have the book release is okay, let's say you have rule set one for traditional, but then you have rule set two for implied. So the implied has to have a certain like it has a little bit more of specific confirmations compared to the traditional, but there's always going to be situations where you may not get the internal transition for the traditional sweep, but you may not get the type of engulfing for the implied sweep. So, what time frames are you going to need for this? And then what type of confirmations are you going to be looking for this? So the nuance is figuring out which one is ideally for you in that on that time. I mean, on that time frame, on that asset at that time. So I don't have go tos like it just go based on what I see. Sometimes like I haven't seen many like order flow disruptions. Like does that mean that they haven't been occurring? No, I just haven't been seeing them. Like I go based on what I see. And um maybe I could be a little bit biased right now because I'm doing a lot of research for the sweep. So I'm seeing more sweeps by default. So maybe I just have to restudy up on order flow disruption and see more order flow disruptions. Right. But then it also depends on how you're gonna apply these models, right? Because models aren't execution models. That's not what they are. Models are models. Models can be framed as biases and they can be framed as executions. Like it just depends on you know, which one you're looking for or how you're going to use them. Because I'm not going to tell you which one, like, I'm not going to tell you one is better. I'm not going to tell you essentially one is my go-to because all that's temporary. Stuff changes. Like different pairs show you different conditions at different times, right? Maybe my eyes see certain things at one time and one doesn't, right? So like your question doesn't like I can't answer that because I don't want you to think that because I'm seeing that that's what you should be looking for because that wouldn't make sense. Okay. But yeah, I'm very interested in how I'm going to go about the and how I'm going to go about the sweep book because the sweep in and of itself is manipulation, and manipulation is like one of the core drivers of the market. So I'm diving into like the history of manipulation, um, how like then that then became technical analysis via Wyckoff stuff, and then pretty much like sweeps are going to be my modern touch on how to use those sweeps with Wyckoff ideology to then present these situations, like these types of situations. Because what I'm doing is applying, right, the idea of trading ranges, looking for the manipulation to then go lower. Like that's all Wyckoff is, the study of ranges and then the study of manipulation to the opposite direction. Right. But manipulations have been around forever. Like 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 people buy to sell and sell to buy all the time. That happens in every market. It's a principle that doesn't change because human nature doesn't change. I think it's just what works for you individually. It's a personal thing. Yeah, it's nuance. It's nuance. Everything is nuance. Like, what touch can you make to make this work for you? Is essentially like the whole just okay.
That's me.
Mm-hmm.
Um, or simply we gave this CBOS, and that's not really a say to me to short. However, after we come to the POI and I see this 2 minute engulfing, I entered. And then there's a
Mm-hmm.
3 minute here, which I re-entered because the RR was so high, and then I caught another win.
Mm-hmm.
That's basically my two trades of the week. And I wanted to ask if I could share my EU chart.
Sure.
Thank
And the ones and modifications is what changed for you. But yeah, but like that's what like that I talk about that in the book. That's what derivatives are. Like you use information, experience, and findings to build and mold a derivative.
you. Is it sharing?
Mm-hmm.
Well, I just wanted to say that on EU, if we look bigger time frame, we're actually coming to this POI right here, which I really like. Now, I was looking for longs like over here. However, it didn't really give anything. It broke the POI simply because we're bullish, we CBOS, and then to continue this internal trend, we gave a CBOS here. However, that broke, which implies structural disruption, and then we're bullish again. So we're bullish here, and now we're bullish again. So I was looking to buy for buys here. However, as you can see here, it never really gave anything. We left a ton of liquidity here, and we didn't really liquidity grab anything. We didn't really do much for me to find an entry, and then we went up. So in my humble opinion, after we swept this high right here and these equal highs, we should rotate back down. I don't think because this liquidity that was left over here, this whole, all of this, I think we're gonna come back for it. That's like my EU, um, how do you say in English? Prediction.
Bias.
Yeah, my bias. Because for me to say, okay, we're bullish here, and for us to continue being bullish, I think this was a pivotal moment for us to give us a nice, clear liquidity grab or Wyckoff in this POI to continue higher and continue this whole big trend. But however,
Mm-hmm.
because of this very impulsive move down, because we left so much liquidity behind, and there's this POI here, which you might want to tap, this 1 hour that, as you can see, took liquidity and gave a very impulsive move. I think we will rotate down again, maybe do something like this,
Mm-hmm.
you know, range here a little bit, go down, take liquidity, or continue, or even rotate lower. Come here, fill this inefficiency, come to a POI over here, range, and continue higher.
Mm-hmm.
That's like my thing. If you can give some thoughts, because when I saw this happening and giving me no entry, I was like, this is a fake move.
Mm-hmm.
Do you think it's a fake move?
I don't know. Let me look at some stuff first. Let me look at this.
You think? Because not giving an entry there, I think was really
So whenever I think of stuff like that, I think of why, and I think of drivers. Like I think of drivers for EU, and then I think of drivers, or if, in terms of the drivers for EU is DXY, and then I also like to reference EG. But let me see what this did first. Hold on. Did this reach? This didn't reach 71. Yeah, it didn't, which is kind of silly. Yeah, kind of silly. It didn't reach that, and it didn't reach the POI, right? It didn't reach this. I think it was H1.
yeah.
Oh yeah, it did technically. Technically, it did reach here, but I like to look at what's occurring in DXY and EG for this because clearly this isn't just like EU. I mean, this isn't just DXY moving, right? Like if we're looking at the time frame 7:30, like pretty much the New York session, and we look at dollar, right? At the same time, right? Dollar did give that manipulation here, right? It did give the setup there, right? It just didn't show the transition in EU. And I think it didn't give the transition in EU because if I'm seeing that DXY gave the transition and the execute the model there, but this didn't, I think this means that maybe EG was being annoying, which was this was yesterday, right? Yes. Yes. So this is why I think the EU move didn't present an opportunity. So at this time, which is here, right? If I'm not mistaken. Oh, I'm sorry, here, if I'm not mistaken. Like we're seeing this pretty much attempt to go lower, right? We're seeing this attempt to go lower, but we're also seeing DXY gain liquidity and attempt to go lower as well. So if you have DXY trying to go lower, and then we have EG trying to go lower, then EU is going to be a fight between which one is more bearish. Like that's just kind of like a like cross correlation for you. So that's why I think this was actually stupid because it didn't give because it can't give a movement because both DXY and EG are bearish. So it's kind of like this is kind of just gonna stall. So I'm not too worried about that. I think I like to prefer to use my drivers to see what this is gonna do. And you guys know that we have always been I've been bearish on this since I think it's been like 2 months now. Like shit. Like no, sorry, not here. This is the other dollar. Um like this here too. Oh, and this here too, if you want to compare these $2, like DXY, it gave the reaction once we got into the point of interest. So the delivery is a-okay, from my opinion, for DXY. And then if we're looking at the other dollar, right? This one didn't reach, which I didn't like. But that's just the H1 POI. But this is why I don't want to this is why I use sell to buy zones and buy to sell now. I don't want to rely too much on uh on specific perfect POIs because this did hit the buy to sell, right? And and so this is enough for me to confirm that this is probably not going to return, especially because NFP did give us that big move today, right? And then I'm also trying to understand the overall picture here, which if I'm looking at this, right, my overall picture is still the same. It's still the same. And I think our next target is definitely up here. And I just think now we're seeing pretty much a range play out. And let me try to put a range on here for you. So I'm gonna keep that on there. So if I just make a range, um, right, we've already came to liquidate that side of the range, but we haven't come to liquidate this side of the range. So I think we're still gonna continue lower. And depending on which side is liquidated first, I'm going to probably see that as the manipulation if that aligns with the external bias, which it does. So I think that this is just going to go lower. And at the very most, I think we'll come back here. At the very most, like come back here.
Okay, now that makes total sense. Now I think we're not gonna return. I like that.
Yeah, yeah. Just
I
it's
like
just
that.
like really
Thank you.
it's really
Uh,
it's just like a cross correlation, like I wanna use like I just decompose the pair. Like EU is composed of the euro and the dollar, but the pound and the euro are probably the two strongest correlating pairs outside of like EU and dollar. I mean euro and dollar, sorry. So I'm gonna use EG as a frame to see if for example, if the euro is gonna be weak and the dollar is gonna be weak, then I probably won't want to trade that. But at the same time, you use the inverse as well. Like if EG is giving me that downside move, then that means that the pound is stronger. So that means that if I get a bearish setup on dollar and the pound is stronger, then GU is probably the pair to trade between EU and GU, which I don't have on here. I haven't been looking at it too much, but I promise you this probably did have a decent setup at the time.
I like that. That's big for me actually. Thank you.
But like this probably did have a good setup yesterday, no? Like did it? Yes or no? Maybe so. And that's something LexWave showed me, guys.
I participated in a EU trade um this
Hold on, give me a
week.
sec, give me a sec, give me a sec, give me a sec. Just type it in the chat, bro, and I'll get to it. Yeah, see, this did give, I guess, reasonable scenarios. Oh no, it's today. I'm tripping. It's today. Oh, actually, maybe not. Huh? Yeah, I guess it didn't. But I guess you see what I'm trying to tell you. It's you leverage EG and leverage dollar to see EU and GU pretty much. Um, and then for like CAD and like AUD I don't really use too many drivers just because the dollar, or especially with AU, the dollar kind of just drives AU for the most part. But I like AU because it moves during my kill zone, which is Asia session, because obviously it's part of the Asian markets, and it also moves during New York because it's a dollar pair. So that's why I really like AU, and then UJ just for the giggles in my kill zone session,
Big
and then
giggles.
USD CAD sometimes is cool. Sometimes like, these
What's
actually
the
move kind
difference
of stupid.
between the US dollar and the DXY?
This one. So this is a DAO. This is a DAO basket. This is a basket based on I think I forgot, but I need to get I might get that answer for you and I'll put it in the chat because LexWaves put me on this one. Which is the guy that's gonna be running the fundamentals course, which is done by the way. I'm just having someone uh put it into slides and then he's gonna make videos on it and then I'm gonna post it on the channel. But yeah. Let's see. What who was looking at what trade? I'm sorry. We had someone looking at I think he said participated in EU.
Yeah, I'm on the road right now. When I get
Uh-huh.
home, I'll definitely post it because it's not on my phone, it's on my laptop.
Oh, okay. Hmm. But yeah, I'm trying to think. I don't think I would have been able to enter here. And you know what? Fuck this. I'm about to delete these pairs, and I'm gonna go back to my FXCM feed. I just don't like these manipulations, man. They're really annoying. And it's the same thing with crypto too. Like, I'll show you guys what I have for crypto right now. I think I'm using the perpetual contracts, but I think I'm on Bybit, and then I use that as reference to my Vantage um stuff or my Vantage charts. EUGU.
I have a question about how deep into Asia do you start trading? Because the spreads are really high after, New York closes and
Uh,
there isn't much
my
liquidity.
kill zone. My kill zone is only 2 hours, bro. It's 3 hours into the new day.
3 hours into Asia?
Yeah, it's usually when 3 hours into the new day. Am I missing a pair of USD? AUD USD. Is Oanda cool? Yeah, Oanda's fine. I just look. If you look at Oanda, oh, I do have volume here. I think I use a different volume. That's why. But it doesn't have the traditional volume. So if you guys want to use Oanda, then actually, you know what? That's game changer. I might have to check this weekend which Oanda. I mean, if Oanda is better than FXCM or not. But this is the volume that I use, I think. I use traditional volume, but I put it on the bottom. And so I could just double click on and off. So yeah, I'm gonna look and see. Actually, no. I like FXCM better. You see that gap there? The gap, it's kind of filled in FXCM. It looks as a candle. So, and it doesn't manipulate as far as others. So no, I'm gonna just stick to FXCM for now. But FXCM and Oanda are considered the two, I guess, preferred feeds on TradingView. If I check M1, M2, and EU, you're talking about Thursday, right? Yeah, the problem here, it's the like if I was gonna buy here, right? Like let me annotate here. If I was gonna buy here, like we already saw this.
I think that
So
was a
once we buy this, then I would have wanted to buy either here or here. But this is like pushing it because we didn't really create a substantial new high. So like I don't know, I don't think this is ideal for me. Like once I saw this, I'm like, you know what, fuck this. Like I'm not looking at this. Like this is kind of dumb. Like I guess the kill zone presented a good opportunity to the sell to buy, but I don't know if I would have justified that as a model.
Need to expand my pairs.
You saw a liquidity grab on HT. Yeah, bro. If you look at like M15 stuff, M15 models, like I like my implied sweeps like on M15, M10. And if you guys haven't noticed that, but they look pretty, they operate pretty well. Because then an M10 potential sweep is like a M3 internal transition. So I could just like zoom into M3 and what. And that's the only time I would ever need to zoom in. I saw liquidity grab on HT. I don't know, HT, what do you mean? Like, yeah, there's this. Like clear, yeah, this is essentially the spot where I would want to look for a because like this is kind of the model I'm gonna present um with the book. So take notes here. So obviously there's an internal range And this, the break of this is a CBOS. So clearly we're bullish. So if I find a sweep in this area, then I can more than likely aim for that. And then my TP1 is usually like an internal high internally or EQ. And then TP2 would obviously be the high. But this is kind of like the gist. This is like what the gist of this is the gist of of Wyckoff, the study of ranges. Nah, Wyckoff cycle. Right here. And zoom in, zoom in, zoom in. All right, so the study of ranges, like the general approach of Wyckoff is the study of ranges and then entering upon manipulation. Study of ranges, enter upon manipulation. Study of ranges, enter upon manipulation. Right. And how would we know whether to sell or look for the seller or buy? Well, that's why we have structure, direction, right? And then liquidity would be that manipulation. And then the execution is figuring out how to enter based on that direction liquidity to get this move. And so, yeah, so like the modern day approach is essentially to have a bullish range. Oh, actually, let me do a better drawing than that. Let's say it's here, here, here. So we want the range to be made, and then I want to enter here to achieve this delivery here. But that's TP1 technically if you learn how to hold, if you can anticipate this as being the creation of a move externally as well, not just internally. Because this is the creation of the move here. But this could be the creation of the move here because of market fractality. You know what I mean? But yeah, do we have any more questions, concerns, case studies? All right, like here. 1, 2, 3. CBOS. That creates a range. Model. Doesn't matter the model. It could be sweep, implied sweep, target. That's kind of like the gist. Any thoughts, concerns on that? But yeah, if you guys have any more case studies, feel free to send them in real quick. I will be right back. Give me 2 minutes. All right, guys, my apologies. I'm back. Let's see if anybody had anything to say. By the way, guys, if you guys don't ever have never used like a standing desk, highly recommend. Super highly recommend. I got mine off Amazon for like 150 bucks, and I've had it for like over a year now, and it's been working perfectly. Let's see. Trade one. Okay. Okay, nice. You're on Pepperstone. How do you like Pepperstone? Pepperstone's nice, no?
I like Pepperstone. I actually primarily use 8cap, but 8cap is with my derivative notes. So
Mm-hmm.
I chart Pepperstone for just the RCV structural.
Okay. What are you from the US?
Yeah, we live in Dallas, or I live in Dallas.
Oh, you live in Dallas. Oh, neat. Neat.
Yeah.
Try to live close to uh
So I'm curious to see your thoughts. Again, I'm not sure you're gonna like either of these. I wish I had some more time to put my notes. I can explain through here, but the basis is
no,
still
I like this. I like this. This is fine.
RCV.
I like this. This is fine. I like this because even if this is an external CBOS, this transition justifies your delivery to here. So this is like perfect in terms of like just looking for sell to buys and following structure. That's perfect.
Oh yeah, that one. So that one I wasn't. That one was like picked like perfect RCB.
Hmm.
This like the trade. I'm trying to block off the result so you can see what I took before the result. So that blue on the far right is actually the trade I'm talking about in
That's a
trade one.
CBOS. Okay. No, that's a CBOS. That's fine. It just like this is like a type of sweep per se. Like if you're
Right.
anticipating this to be a sweep, because this is like what I made the mistake on. Like I think it was 2 weeks ago. If you guys remember that UCAT sell where I fucked it up. Where I was looking for the transition, then it wicked me out, and then it went. That's like the one thing I want to avoid. Like for example, here, like yes, you have the CBOS, but like if you wait for the full transition, you would have missed the trade. So like if you can find a median here on how to execute, right? That is technically counterintuitive because it's going against ABC. But like let's say for example here, if you had like an engulfing like on M2, M3, then I can justify this being the perimeter because
Sure.
that's pretty much what the implied sweep would be. Because I want my implied sweep to not only have the CBOS, but then I want the internal sweep as well. And then you go and then give me that. That's what would make that valid for me. But if since you're on M1, the CBOS, if you now have a reason to justify selling here, which let's say you could have used this as a rule, like if you want to take that engulfing, or if you want to take then like an engulfing potentially here, which is on maybe M3, then with the SL here, then that's okay. But as long as there's like a rule there, that's fine.
So I actually that M1 engulfing is what I took, but with
Mm-hmm.
NASDAQ and so volatile, I took the entire high. I'm basically trying to
Mm-hmm.
snipe the
No,
high.
that's fine.
Again, my food for thought was the thing that you said, what, 3, 4 weeks ago, is that if you're catching the large moves, one time frame is going to be against you. I think this is like a perfect
Every
example
single
of that.
time.
Right.
Like
And I think
the
that's a
micro
perfect
of the
example.
micro even.
What's that? I'm sorry.
Like even if you have like a micro in your favor, the micro of the micro is probably against you just because of fractility.
Yep.
Mm-hmm.
So that's
But
been
yeah, no,
sticking
that's
with me. And then I've really been trying to put a label on at what point can you determine a sweep at an insignificant high. I think you were mentioning last week that you're kind of going back and forth with that as well.
mm-hmm.
Um,
There's actually I've been getting deep in that rabbit hole. There's this guy named WD Gone who he studied the relationship of price and distance. I just started looking into it, but maybe that could help me find something because
yeah.
he looks at price and time from I guess like I want to say cubic standpoint. Like for example, if we have price and time, this is 1 by 1 unit, this is 2 by 1 unit, and then
Uh-huh.
it can keep going type. So if I can figure out how to relate like cubic distances or cubic, I guess it's cubic measure based on price and time, then I can start to be able to, let's see, be coherent with how to go about like unsubstantial new lows and highs. Because right now I can just go by design. Like obviously that's a new high. Clearly that's an unsubstantial new high, even without that break. So even if you have this unsubstantial new high, that doesn't mean that it's time to be bearish. It just means that if I want to be bullish again, I might have to wait for a liquidation here
Sure.
because this shows exhaustion. But yeah, it's a bit difficult to interpret that. I mean to be able to explain that, sorry.
I kind of use that relative too. So like that whole
Mhm.
leg, in terms of that whole leg, that break is very weak.
Exactly. That's like the
That's
gist of
kind
the
of again
sweep
why I
as
kind of
well.
said this could be an implied sweep. I'm still, and
Hmm.
I think NASDAQ, as far as any of the modems of trade that I've seen, has the most sweeps, highest volatility. Can't tell you how many times I've been 5 points away from take profit. And you see, I didn't even get full take profit, I don't think, before it completely
Hmm.
reversed. And
Hmm.
within 15-minute candle, your profits are completely gone. You're stopping break even. So
Hmm.
second one, the same thing. That far right is where I entered the trade, but everything else is kind of the idea.
Because the sweep, if you get a sweep model here, then that's opposing this. So you can aim for the opposing high. So that's fine. So you're taking upon the structure break here.
Correct.
Hmm. I
And
like
my
that.
thought process
That's not opposed. I'm not opposed to it. Just
is
stop loss
and I
below
posted
that.
this in general chat, and somebody asked, that's just a CBOS, and that previous. So I actually had a sell. If you see that little choppiness, maybe what is that? Right after 8:45, I actually took a sell and targeted liquidity, and then I reversed the position when I saw that happen. And the reason I like that break is because there's multiple mitigations going in of that last buy to sell.
Hmm.
I take a higher likelihood that it invalidates that buy to sell because of the mitigations.
And see this as well. And this is, yes, a CBOS, but this can imply unwillingness here if it's a higher than the previous low here, which it is. Because technically you created a new high,
Yep.
right? Technically, right? So you see it's an unsubstantial new high, so that's why we can't take the immediate take there. You can't take the immediate one because it's unsubstantial. But this is the sell to buy, and you're in that, and you're taking liquidity. So it's a CBOS, but it implies solidification of a pullback low. Maybe. Maybe. Here.
And so the other thing about this trade is at that, so 9 o'clock, is it 9 o'clock? Was a ISN. So it was a news release, and the news release just didn't have enough continuation to continue it down. We immediately broke structure post news release.
Yeah.
We had already swept the high, in my opinion. So that high sweep of the green solidified point, if we were going to continue down, I want to see some strong momentum.
Mm-hmm.
And I'm
Mm-hmm.
just not, again, I see that multiple mitigations followed by a news release that couldn't push it further down either, which is why when I saw that sweep, I said, okay, the news release
Mm-hmm.
was to target sweep. The
And this
sweep
looks like a potential like engulfing maybe M5 or something.
on a different time frame, it is, yes, sir.
Mm-hmm. That's why I like high momentum because high momentum kind of implies engulfing.
And then
Yeah, you see?
I take partials,
I see, I see, I
but
see.
I didn't, I full transparency, there was no way I was holding it that far. I meant to
Mm-hmm.
put the sessions in there too, so you could see, but I took partials and held.
Yeah, you see, your position is fine. Like if you make your stop loss like the low, because this is structural disruption. You know what I mean? So you make structural disruption, and if you take that position and you put your stop loss at the low, then you can now increase your delivery here
Yep.
because this model is causing the disruption of the continuation. So if you're not going to continue lower, you already failed to continue lower, then you're going to go higher. You see what I mean? And
Yep.
that would be, this is like another example here, like when you have a range, right? And you come below the range, and if you see a sweep or a model here, then that's worth taking to at least take here. But if you are able to connect this like with higher levels of structure, then this is the beginning of this move, but it could also be the beginning of the entire move if you're able to read
Mhm.
it. And then that's pretty much where crazy gains are going to come from.
Yep. And it was the same concept as like the scalp was clearly against me. Like we had a CBOS on the scalp, but the big move comes from one time frame being against you, and NASDAQ's not always going to give you a transition.
Exactly. Quarterly theory, time then price. No, 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 no. Quarterly theory is like levels. No, no, no. That's completely different. And that's kind of implying like support and resistance and stuff like that. Not that there's anything wrong with that, but I don't really like have a need for it. But yeah, that's kind of I guess the gist on all that. But yeah, that let me see what's his name? There was Legisto here. Yeah. That thing with EG and EU and all that's pretty neat, right?
Yeah, that's fire.
Like you use the same principle for like EU and AU because then you can correlate EA. You know what I mean? Like I don't really do it that much just because the dollar has like a way bigger correlation on AUD USD than it does like EUGU, in my opinion.
But which dollar? The
But
Dixie or the
uh, both,
both?
both. You just use both of them to develop a bias. And if one bias is in like let's say that like I said that if EG is favoring bearishness and dollar is favoring bearishness as well, then EU can't necessarily move because it's a weak euro, but it's a weak dollar as well. So if EU or if E and U is both weak, then where is that movement going to be coming from? Right? Like if I use, like I could really, honestly, like I could even only solely start trading um, like EU, AU, dollar, and then have EA as a reference, and then have gold. Gold, I just like gold because I just like how it moves, and then ASEV is like most of the trades on there are from there. Do you find indices move different to FX? Brother, manipulation is permanent. It's an eternal thing in the market, bro. Manipulation is always gonna occur. Trying to upload link. Cool. Yeah, like let's see, I had AU and then let me add EA. So oh I'm sorry, Euro AUD. So if I have like let's just say like my buy per se, which was down here. Go to M5, which is down here, right? At 950 yesterday. And dollar at 9 a.m. yesterday, right, was giving me signs of a potential sweep. Then if I'm getting dollar to give me a potential sweep to the downside, and I'm getting AU to present a move into the upside based on a bullish sweep, and EA yesterday here, which is yeah, right here. Well, technically, EA at the time is in a bullish structural range, and so we're anticipating this to go higher. So this would be technically against my bias, technically, I think, because if EA is going higher, then that means that the euro is stronger than the Aussie dollar at the time, meaning that this is technically weaker. So I have to figure out if this bias is going to be able to benefit my idea, right, of this being weaker or this giving me a move to the upside, right? So let's say if EA was weaker, like we said, let's go back. At the time, wait, when exactly was my execution? 10 exactly. 9:55:10. Okay, no, I was looking at the wrong thing. 9:55:10. Oh, sorry, right here. No, 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 no. Okay, I was looking at this wrong. Sorry. Um, this is yesterday or is this Wednesday? Wednesday. This is at 10. About at 10. Okay. Oh, okay. Actually, no, this is different. Never mind. I was looking at this wrong time. So if I'm looking at this at 10, which is the time of my execution, right? And if I have, right, an internal potential bearish range and there's a move here, right, then this is potentially giving me a sign of EA to potentially go lower, at least until here, right? At least. So that means that EA would be going lower, meaning that the euro would be technically weaker right now, and the Aussie would be technically stronger. So if my dollar is looking to be bearish, my Aussie and EA is looking to be bullish, and my AU is giving me a potential bullish sweep, then they all align, which could be a correlation to give me a move. Does that make sense?
This is a free game right here.
Yeah. So it's like you could do the
I
same
like
thing.
that.
You could do the same thing with like gold and silver. Like look at gold and silver. Like okay, let's say dollar is giving me a bearish move, and we have gold, and then we have silver. Like it's kind of like it's a type of this. I consider this math. I guess it's considered math. Um, but if we're looking at actually, I have a list actually. Actually, no, fine, it's fine. Like let's look at the date, April 25th. Where's April 25th? April 25th. Okay. Let me do vertical lines. And I'm kind of hopefully I don't stutter too much because this is kind of I didn't plan on talking about this today, but April 25th. Oh no, this was April 2nd. My apologies. April 4th, sorry. My apologies. So like let's say we have gold and silver, right? They're technically just about to start a big impulsive move, which is on the 7th when it actually does a big move. And here on the on the 7th, but it stalls out a bit. So if you look at the cross of XAU, XAG, right, at that time, okay, April 7th, we said? Uh, April 7th, yeah. So here, right, if we're seeing that XAU, XAG is overextended, but dollar is setting up to be, well, let's say dollar is setting up to be bearish. Let's make that the absolute here. But if gold silver is overextended to the upside, that means that this is probably overbought in terms of gold against silver. So we could see a downward movement. And if we see a downward movement and we see bearish dollar, then it may be more beneficial to buy silver than gold because it has the potential to give you a bigger impulse. Right? Does that make sense?
For sure, yeah.
That's why, for example, if we look at this like on the monthly, weekly, that's why we saw gold well, not I think it was not silver explode, right, during these months. Well, not during these months, during these couple months, right? If we see silver, we exploded, right? And gold exploded as well. But if this is giving you signs that it's going to be bearish and you have a buy scenario on both silver and gold, then it may be more beneficial to buy silver because silver could give a bigger move proportionately than gold. Overbought, eh, technically, I mean, just like just for argument's sake. But this has a long way to go. That's why, excuse me, if we see this go up a little bit more and silver stalls, then bro, this has way more room to really expand. You know what I mean? Like this has way more room to expand percentage wise. So that would make silver technically a better investment if we're talking percentage wise. You know what I mean? And so you use the crosses like across the board. Like that's why there was like a weighted like there's weighted what's it called? There's weighted currency crosses. Like I'm gonna show you that before I get to this guy's case study. I need to find that video. I posted about it years ago. Hold on. This is old course stuff. This is like course one miscellaneous. Pause it, pause it. Indexes. Here. If you look at this video, I actually have the weighted crosses here. The list of index. These are like the weighted crosses that tells you kind of like the strength of currencies based on the division of all of the major versions of that cross, if that makes sense. Like we're using all the majors, then we're using the weighted version of those majors to give you a type of move. So, for example, like if we did, I didn't put USD on here, right? No, I didn't. So if we did the euro, I think I can add it here. Can I?
You did put USD.
Okay, so that would be one. I did put USD. Where's it? Where's it?
There's the second
Oh,
one.
right here. Sorry. So this would be another like variation of Dixie and like dollar. I just stopped using them over time. You just use these as another version of dollar. So you see, they look similar but different.
You're not showing it to us.
Oh, fuck. Sorry. Similar but different. So it's like another Dixie, basically. But it's the same concept. Like I don't see the need for this if I can use like AU, EU, and EA. Like I think that would be a little bit more efficient. But yeah, it's pretty neat. It's pretty neat. Yeah, this is
So
yeah, I
looking
had
for a
this.
correlation before going into a trade might say that the trade will
It
be
could validate it. It could validate it because
invalidated.
you have the same bias on three crosses.
It says your timing is correct as well, maybe?
Exactly. That's the whole point. Can you justify a scenario on each one? Yes, then your timing's probably right. Ooh. But yeah, maybe I should start using these more so you guys can see. Um, but yeah, let me go through this guy's case study real quick, and then we can probably wrap it up for the day. Okay. Okay. Hmm. Okay. I don't know what this POI is, but yeah.
On the higher time frame, I didn't see a POI. I saw an efficiency fail. It
Okay.
was
On what
it
time
was
frame?
I'm gonna look for it now.
Like maybe M15?
Possibly. It was probably one of the main.
Oh, it was M15. But it never tapped it, I think.
The wick, it didn't tap it. No, it didn't.
No, it didn't tap it. That's what was throwing me off. So it could have been like an M20 POI or something weird like that. But I don't like to go through time frames and like try to justify it because then I think I'm trying too hard.
I'm gonna
But
show you what I marked on the 15.
but technically like this is just one zone with a POI. That's all that zone is to me.
I just
Um
try to make a trade after finding structure with like the continuation.
Oh, I see. Okay, this is aggressive, but it's justified. I like it. I like it because you waited the CBOS, but then you use the internal CBOS as an assumption of being internal unwillingness based on the CBOS. So, I mean, it's not wrong.
And
I like it. I like it. It's not wrong.
it flew way further than I thought it
Yeah, I
was.
did. Yeah, I did. That's why you reference the time frame. You know what I mean? Like I'm sorry. If you learn how to reference the whole POIs here.
Hmm.
Because obviously the point of this POI
I
is
saw the
to
first
take
one as a
you,
sweep,
yeah,
like,
it's to take you here.
and I saw the equal highs after the sweep from before. So I
Uh-huh.
took that as a range that was like probably like we would go higher from there already, especially coming
Mm-hmm.
from even further back. We had swept liquidity, and I saw from higher up we had
Yeah.
swept
Here.
liquidity.
Mm-hmm. Yeah, so you sweep liquidity here, you come back to the POI, and then you have a transition here.
And I saw the volume when I was
Mm-hmm.
looking from the bearishness, because I know it's a lagging
Yeah.
indicator, but like we started like really dragging out.
Yes and no.
Hmm.
Mm-hmm. It's technically not lagging per se because it's based on candle closure. So like if it's minimal, then there's a sign of a move coming. But yeah, I'm not like actually I like that execution. It's aggressive as fuck, but it's valid. It's valid. I just maybe would have put the SL at the low because if you put the SL at the low, then now you can justify holding because you're looking at unwillingness internally for the external bias. So then if you put your stop loss at the invalidation,
Hmm.
you can probably hold till to the max target, right?
I
And
actually got
then
stopped out, and because
mhm,
when I went back to that time frame, I became like it made me dive back in. But like when
mhm,
you go back to that other chart, you're gonna like see the continuations. And when I hit that continuation, it was the second one, that second line, the solid one,
mhm,
not to the right. So I saw that first. Yeah, we went down. I saw we took that. And then the second line, I got into that engulfing, but I got stopped out. Because it wasn't really an
mhm,
engulfing for real. But then I decided to come back in once I saw that we were like coming back into this spot that I drew the POI for.
mhm.
That was my invalidation point.
I like that. Yeah, I do like that because it is a sell to buy. So yeah, it's aggressive. It's definitely aggressive, but it's valid. Like it's not like I don't. It's not wrong conceptually. But yeah, if you can take these trades now and then look to apply the proper invalidation, and then use the external bias, then you can really start to hold these trades. Because like AU, I was debating on holding my AU trade. I'm a little disappointed I didn't because of the external time frame. But I'll come back to that here.
Yeah, I thought we were gonna take liquidity and come back down. I was sad because I turned like a 1.8 to, but it really went for like 1 to 30. So,
Yeah, you see, and this is like the pretty much trying to make high risk reward practical, and that's like it's tough. But I mean, the winning trade is like all that really matters. Because if you can get that execution right, that's really the biggest thing, bro. If you can get the execution right, you will get a reaction, which gives you enough time to either take a partial, move to break evens, try your stop, etc.
mhm.
Okay, I like it. Continuation. I just think the target, yeah, the target is a bit extended here. So this is what like a point negative 27 fifth here, based
Yeah,
on
negative 27.
high,
Yes.
low, retracement. I like the execution. The execution is very well, very good.
Yeah,
So yeah, I do like that.
from there on when like to the upside, like we skyrocketed from there, but
Mm-hmm,
was kind of searching for the CBOS. Like I think that this point right here, it's the CBOS of some structure right here. And I consider
yes.
this one as a kind of a transition, like from just give me this opportunity and going down.
Mm-hmm, mm-hmm. I like it. I like it. It's good. It's better than last week for sure. Better than last week.
Okay.
I like this. I like this. The unwillingness based on the model, unwillingness based on this. It didn't break, I see I would probably justify the same thing.
I
And then
think
this closure is really good too.
Yeah, I think that just break a little bit here, but I don't know why I consider it like LGC. I still have to get good at LGC.
Intuition, bro. Like you're building that intuition. Because yeah, on this
Okay.
time frame, yeah, the engulfing here is really good. That's probably what's giving that away.
Yeah, and I was like targeting just the POI right there.
Hmm. And this is only an LGC if this was bullish externally.
Okay.
It's only LGC. If not, this is like a disruption.
Okay.
And
Oh
if
yeah,
you're
you
gonna,
told me.
if yeah, and if you're gonna take the time to take this transition, just make it pro trend so you can then aim for the higher target. because this
Okay.
takes a lot of focus. This takes a lot of focus and a lot of work, in my opinion. Hmm. Yeah, so this POI, that buy to sell, this is stop loss. Yeah, yeah, I wouldn't have moved your stop yet because this is I mean, this is a counter trend internally. So like if I'm looking for if I'm looking to move my stop, it's an LG, right? But it's not a pro trend LG if it's not a pro trend move. So if I have this, then I'm usually waiting for this to be taken to move my stop. Or if I have an LG like here and then does this, then I can move my stop.
Okay. Yeah, I was kind of right because I know it wasn't like super correct like direction. So I moved like really quick the invalidation to the point and I got stopped. Then I got
Huh.
the re-entry right there and
Hmm.
played out pretty much
Hmm.
good.
Yeah, see, like you could probably like did this continue higher after this? It looks like it did.
It was a mess up then during the day. Like it went again down after
Oh,
that
yeah, yeah,
one,
yeah, yeah,
again
yeah.
up and yeah, no man land.
Mm-hmm. No, yeah, so I would just not have moved my stop yet there. Um, but yeah, that's okay. That's fine. Somebody sent one in the free channel. Is the audio down? Oh, I think I was away for a bit at the time. One, I hate this chart color. Oh my gosh. Um, just felt a bit lost here. Did I mark the structure? You're thinking really hard about this. You're thinking too hard about this. Low, high, CBOS. This is a pullback low because you solidify based on that break, right? That does not, these are then internal points, so they're not really too relevant to me until we break a low that creates a high internally, which is here. So that means we have a pullback low, we have a higher high, but that's technically like unwillingness. So that's why when you have this break, you can justify selling here. But you see that we now have unsubstantial new lows here. So we have a high, low retracement, unsubstantial new low. Once that breaks, then this is now unwillingness here. That one's unwillingness because we failed to break this low. So if you fail to break this low, then we're still within the range. So this is my next target. So I just have to find the position. OFD, that's not OFD. That you have the LGC here, technically, or like it depends on which structure level you're looking at. And then this is a good entry to aim for here because of the LG. So now what kind of LG? That's for you to figure out. And that target would be there. But then after that, bullish OFD. No, bro, you OFD. No, 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 no. I would recommend you read up on the book, the book on OFD. I'm not gonna go through OFD right now.
I have a question.
Uh-huh.
Um,
On that one.
yeah, like how can you recognize the sweep and like changing and continuing like the trend with the LGC? Sometimes you see like the sweep and then goes like down or
Like
up
which one?
depending on the
Which
situation.
one?
For example, sometimes I see just the price doing like kind of like this, take the sweep and going down, even if we are like kind of bullish. And sometimes it just then you see and then continues up.
Yeah, well, that depends then on the transition here. If you have then an LG here, then this is going to continue lower. But if you have a structural disruption, right, then it won't continue lower, right? Like for
Okay.
example, okay, here, right, this is a unwillingness technically because we broke this and then we broke a high that broke a low. So we broke that. And this here is the structural disruption, right? Technically, even here is structural disruption as well. I just didn't note it because that's not tradable to me. So this SD here is tradable. So this is structural disruption based on technically high, low CBOS. disruption, then that's why I can justify buying to here and here.
So there has to be a transition before
Yeah, it's
taking
all
the GC.
transitions. It's all transitions.
Okay.
Everything is transitions. Like low, high. This is a pullback once this breaks. But if you see an LGC here, let's say, for example, then if there's a pullback, then you can aim for here. That LGC is a transition, right, to build you to here.
Okay.
Right. Or and then it depends. Like it could be LGC, it could be, for example, this is the sell to buy. So this is the POI, and then the POI here is meant to target here. But if that risk reward isn't worth it, you don't trade it. You know what I mean?
Okay.
Yeah, AU. This is my AU. Yeah. I took the sweep here. But the only way I could have held is if I'm referencing like H4 structure. Because this was previously bullish. And I'm fucking bearish as fuck on dollar. So like if I'm really bearish on dollar and I have an excuse on one of the minors, something I'm gonna research this week too is I wanna see if I can find out the correlation percentage of dollar to AU, EU, GU, UCAD, UJ. Because it's yes, they correlate, but it's not about if they correlate, it's about how much do they correlate. So I'm actually gonna look that up because I've been really curious about that recently. I know EU is the biggest correlation, then I think it's GU, then it's AU, then it's NU, I think after that. And then it's UCHEF, UCAT, and UJ. Something like that. I mean, honestly, I think I'm gonna just look it up like on Gemini or ChatGPT. But yeah, other than that, does anybody have any more questions, concerns? Because I am working with a crypto wallet here soon. This will be coming soon. This pretty much you guys ever heard of Exodus? No? Yes, no, maybe so. Anybody heard of Exodus?
No.
Mm. It's like a crypto
It's like
wallet.
a crypto trading wallet, I think.
Yeah, it's a crypto trading wallet. And I've been working with these guys recently because I got put on by one of my friends. And we invested in them, this and that. And they're pretty much gonna make something that's essentially better than Exodus because they don't because Exodus I think only makes their money from like fees and stuff like that. But we want to create a pretty much AI based tools in terms of crypto as a whole, not just with trading it or with holding it or stuff like that. We want to also incorporate other tools and stuff. But I'll definitely give you guys more details on this later on. But yeah, and Exodus is a publicly traded company, so we're trying to be not competitors to them. We're trying to be more than them because we're going to offer more. And then obviously AI is new, guys. So I was talking to him about AI as well. And I asked him like, how do you compare AI to like the internet, social media, and blockchain, like the beginning of that? Because we're in the beginning of AI. And he's like, AI is pretty much like in the dial-up phase of internet right now. So it's a perfect time to at least try to get into it because AI probably won't replace you, but people who use AI probably will replace you, if that makes sense. Mm-hmm. You see, so this would be, I guess, what you were asking me earlier about a break and a sweep. Like this is not a break of structure.
Okay.
You know what I mean? So then this is the sell to buy. And then if you get a transition here, like then this would be my ideal buy. But yeah,
Okay. Because I
this
consider
is
that
all it
one
is here.
like LGC, and I was like, okay, this thing has to come down.
Uh-huh. Wait, LGC where?
Right there on the minimum. Here.
Well, I mean,
And I saw
sure
this one
if
reacting from here, and I was like, okay, like I kind of missed the spot. So I was like, I will try to get on the spot even if I couldn't go like below 1 minute.
mhm.
So I was
And then
like,
this is
something
uh-huh.
right here
Uh-huh.
has to be mitigated, and then got stopped.
I mean, this is also like weak order flow. Like there's too many mitigations.
Okay, when
So
it's too
if I
many
wanted to leave it,
indications, it's weak.
yeah, that's in the it's in the course. It's in the course.
Okay, okay.
But yeah, you should I wish I could see the other stuff too. Yeah, you see, like now the transition would be here. Yeah, your SL pretty much is the transition to the bullish side. So you could have been right, but obviously biases change like very, very fast. Like something can turn from bullish, from bearish to bullish back to bearish quick. Like if you guys look at my UCAD loss like 2 weeks ago or last week, I forgot when it was. I think it was last week. That one was an example of something transitioned bearish, then it transitioned bullish, and then it transitioned bearish again. So technically you could have been bearish, but then this transition bullish. And yeah, that's the sell to buy that caused the LGC. This is LGC. Because you have a sweep. So that's implying a bullish narrative, and an LGC is something that favors the narrative.
Okay.
But yeah, I think that's probably it for today, no? I'm almost done with the book. I mean, at least with the words and the outline and stuff. But after that, the only thing that I really want to do is probably put my stuff up on like school and WAP, but also I start making like more guides and stuff. Like when I release the indicator, it's gonna be when I make like a 2025 like market structure reboot type. Like I'll make that video, put all the rules on there, and then obviously the indicator is just like a convenience because you guys know I want to give out the information, but if there's anything add on, like any convenience, any service, any product, then obviously that is justifiable to meet the charge for it. So I do want to, once I'm done with all that stuff, I do want to make like a market structure updated like video, just makes like some slides, talk about everything, all the rules updated, blah, blah, blah. And then that's probably when the indicator is going to release. And then from there, who knows? Maybe I'll do like other stuff. Maybe I could even talk about the indexes and stuff. Um, Indexes, I don't know, order flow, the models, etc. Just make that like an updated, I guess, course. And then maybe even make like a beginner's video or something. I don't know. But we'll see. But yeah, any last questions, concerns before we head off, guys? Perfect, guys. Thank you guys for hopping on.